Welcome to a special episode of RIMScast, sponsored by Prudent Insurance Brokers Private Limited. I am Justin Smolison, RIMScast host here at RIMS, the Risk and Insurance Management Society. It's an exciting time for the team at Prudent Insurance Brokers. Prudent was named Broker of the Year at the 26th Annual Asia Insurance Industry Awards. This is the second year in a row that Prudent was recognized with this tremendous honor. And I'm glad to have them rejoin us here on RIMScast. In this episode, we will discuss mergers and acquisitions insurance with Abhishek Borgia and Jyoti Krishnan of Prudent Brokers. Abhishek Borgia leads the private equity and M&A transactions, or PMAT, practice at Prudent Insurance Brokers. He brings over 10 years of experience in investment banking. Jyoti Krishnan is the national head for liability claims at Prudent and is also a part of the PMAT team. Jyoti is a lawyer by qualification and was associated with a leading law firm for almost a decade prior to joining Prudent. Let's get started and discuss the how and why of M&A Insurance. Abhishek Borgia and Jyoti Krishnan, welcome to RIMScast. Abhishek, could you shine a light on M&A Insurance for us?
Sure. M&A Insurance is a set of protections specially designed to help buyers and sellers mitigate risk in a M&A transaction. This insurance transfers certain potential risk to the insurance policy. It also allows specific issues to be ring-fenced from wider transaction negotiation perspective. As you're aware, mergers and acquisitions are complex transactions with multiple moving parts. Buyers need clarity on the risk they are acquiring. Sellers want risk being removed from their balance sheet, a clean exit. Therefore, these policies help them have a smooth deal closure.
Abhishek, I'd like you to tell us about the three most commonly used M&A insurance products in India.
So the first one being the reps and warranty, which is also called the warranty and indemnity insurance. Typically in an M&A transaction, the seller gives certain representations and warranty in the share purchase agreement to the buyer. And in case of any breach in these reps and warranty, this policy protects the buyer for any financial loss that may arise. So this basically is used in most of the transactions that we come across, and one of the highly recommended for any of the M&A transactions. The second one that we often used here in India is the double tax avoidance agreement tax liability insurance.
That's also called DTAA, right?
That's right. So DTAA tax liability, this is basically India has a treaty with the Mauritius and Singapore as a country. And this policy typically covers your capital gains tax liability of the seller, buyer's withholding tax liability, and buyer's liability as a representative assessee. All this happens in a case the seller fails to prove its eligibility for the treaty benefits, which India has with Mauritius and Singapore.
All right, so we've got warrant and indemnity insurance, DTAA tax liability insurance. What's the third one?
So the third one is, again, double tax avoidance agreement, DTAA tax fund wrapper. This product is specific to the private equity industry. This covers, potential capital gains tax liability from past exits that the fund would have done. And this helps in the seamless closure of fund when it is at the end of a cycle of a fund. Typically, PE funds take this policy to eliminate the need of a escrow account, as this helps them distribute full earnings to the investors at the time of the fund closure. So specific to private equity industry, but used typically when the fund is coming to an end or closure.
Let's hear from Jyoti. Jyoti, in your view, what are the advantages of availing M&A insurance?
Like any other transaction insurance, M&A insurance enables the concerned party to transfer their risk. However, the advantages really vary depending on which side of the transaction we are looking from. For example, for a seller, M&A insurance allows them to secure a clean exit with no tail liabilities. It enables the seller to receive the proceeds of sale immediately after the transaction is completed. It also strengthens the seller's negotiating position because it allows them to distinguish or delineate their financial stability from their transactional strength. But when we look from a buyer's point of view, M&A insurance protects the buyer from unknown risks, like the fundamental purpose of insurance. But it also helps the buyer in enhancing the competitiveness of the bid because it reduces potential holdback in terms of the consideration. It also eliminates the dependency of the buyer on the seller to keep their promises. And last but not the least, it definitely helps the buyer to ring fence their risk vis-a-vis insolvency, financial impairment, and similar issues which may arise vis-a-vis the seller. Essentially, use of an M&A insurance provides a credible, secure, and cost-effective alternate to more traditional means of addressing and balancing transaction risks, whether it be price adjustment, escrow, retention, or guarantees. Even from an enforcement point of view, it saves the buyer a lot of time because it avoids long drawn dispute between a buyer and a seller and allows the buyer to avail a more quick and adequate relief in the form of insurance indemnity.
Jody, what is the right time for a buyer or seller to look at M&A insurance?
Justin, typically parties would start looking for M&A insurance around the initial stages of when they are drafting the transaction document. Ultimately, M&A insurance is nothing but an indemnity backing the representation and warranties between parties. So, the right time to look for M&A insurance is when they have some visibility on the nature of reps and warranties that are likely to come within the document. In some cases, and this is not the rule, this is more the exception, parties may also look for insurance around the time when their head of terms are final. Now, this is only limited to cases where the head of terms dictate the final transaction and the final agreement is nothing but a mirror image of the head of terms. Largely speaking, it is the initial stages of documentation when M&A insurance would be sought out.
Abhishek, how would you characterize or describe recent M&A deal activities in India?
So M&A deal activity has been pretty robust. If we look at the recent numbers in 2021, we almost had close to 600 M&A transactions. Combined value of these transactions upwards of 100 billion USD. So that talk scores about the way, let's say, the country is growing, economy is growing. If we look at it from a insurance perspective, something, let's say, a transaction which is a sweet spot from a M&A insurance perspective, almost 80-90 transactions are upwards the size of USD 75 million. So that is a real good area for us to focus on. So a lot of activity on that side. Another important element in this is the PE funding. Because what happens is your strong PE funding results in potential future M&As. So if we talk about PE funding that has happened, it has almost grown twice from 2020. In 2021, we had close to 1,600 deals valuing close to USD $40 billion. So if one has to look at it typically from a private equity standpoint, because they are in the business of buying and selling companies, exit route is either secondary or strategic or IPO. And generally, the bifurcation between strategic, secondary, or IPO is 50%. That would also result in a lot of M&A happening. So this all is going to help M&A pick up, and obviously, the more M&A happens, the more opportunities on the insurance front.
So, Jody, what sort of claim trends are you seeing under M&A insurance?
M&A insurance, which is not exactly like traditional insurance. Initially, there were not a lot of claims. That was also because the buyer of the insurance was not really clear on what is the process, what exactly would a claim be, or rather, what is the point in time when they need to notify the insurer. But as we have moved and become a more mature market, we are seeing a lot of claims being notified under M&A insurance. In fact, according to a report published by a leading global insurer, 1 in every 5 policies has a claim notification. That also shows that the market is also becoming mature and they are able to identify breaches and make timely notifications. Some of the largest deals, which is upwards of $500 million, they have seen some of the most frequent claim notifications.
Jody, could you provide some real life examples?
One of the common examples of claims that we have heard about in M&A insurance is, of course, non-disclosure or misrepresentation by the seller. But an interesting example that definitely comes to mind is when a seller forgot to mention that many of the company's customers were going to back out of their contracts for whatever reason. Maybe the customer is undergoing restructuring or they're deciding to undertake a different strategy in terms of business. But a large number of the customers had backed out, which the seller conveniently ignored and did not inform the buyer about. The buyer bought the company assuming that the figures in the accounts are actually accurate and landed up with a company which was not going to make a lot of money. This essentially resulted in the buyer having paid a lot more than what he was going to receive, and this became the subject matter of a claim under the M&A policy. So the policy not only paid for it, but the buyer was made good. So this is a very good example of why buyers would like to buy insurance and how they are able to effectively use the insurance.
Jody, you are a lawyer by training, and as we said at the top, you have worked with some reputable law firms. What role do you see lawyers playing in stitching the M&A insurance?
As the name suggests, merger and acquisition, it cuts through both financial and legal aspects of any transaction. Now, the legal aspect of insurance policy is quite critical because the true value of a policy is put to test only at the time of claims. And we've seen a lot of examples where a badly worded policy can result in a claim getting rejected, which otherwise would have been a genuine claim. So lawyers bring in a lot of knowledge to the documentation and legal issues involved in a transaction. Amongst other things, we have seen lawyers playing a very in-depth role in terms of structuring the merger and acquisition. They also help in conducting the legal due diligence, which is an integral part of not only the transaction, but also the M&A insurance, which is a result of the legal due diligence. They also ensure the legal sanctity of the transaction. They anticipate and prevent regulatory issues and find legally sound and commercially sensible solutions, because that ultimately is the only reason why a deal would go through. And last but not the least, all policy wordings are reviewed by lawyers to ensure that the intent is captured accurately with minimum scope for ambiguity. Ultimately, just in any insurance is nothing but a contract. And review of any contract by an experienced legal professional ultimately enhances its value. So it is generally seen across the world that all insurers who are dealing with M&A insurance would typically also have lawyers on board to review the transaction on their behalf so that it's a legally sound contract, because ultimately they'll have to make a payout under the policy.
Abhishek, with regard to M&A insurance deals that have been completed at Prudent, are there any specific sectors that have your focus?
At Prudent, we are sector agnostic. The most recent tax liability insurance we did was a large transaction in infrastructure sector. Before this, we closed a reps and warranty insurance transaction in a manufacturing company. Another large reps and warranty transaction we did was in data center space. Currently, we are mandated for an e-commerce company. So we are seeing action across industries.
Abhishek, let's talk about value add. What would you say are the value adds that Prudent provides for clients in these sorts of M&A transactions?
So our understanding of M&A transactions, because of the background and the kind of work we have done in past, the technical expertise the firm brings on the insurance of these transactions, our reach in multiple markets, knowledge of markets in London and Singapore, the bespoke structuring of policy because each deal is different, and negotiating best possible coverages and exclusions for our clients, getting competitive pricing. And we have a highly skilled of claims specialists. So all this really adds up to a lot of value add from our side for our clients.
Special thanks again to Abhishek Borgia and Jody Krishnan of Prudent Insurance Brokers for their time and insight. For more information about M&A insurance, visit prudentbrokers.com.